Hello everybody. So today I'm making a bit of a different video. I titled this video, Did the Sun Stop Shining? And it's nonsense, right? It's the name of the video. Because there's really not much to be said. If you want to know what's going on with solar stocks, it's very simple. The cost of capital is going up. And because the cost of capital is going up, there is a slowdown in sales, and the market only looks like a few months out, and the market is selling off the stocks because the market only looks a few months out. I haven't looked at Tootsie Roll Industries, but my guess is Tootsie Roll is up because Halloween is coming in 10 days. That's it. That's all there is to say about Enphase and SolarEdge being worth roughly a third less today than it was two days ago. 48 hours ago, these stocks were worth about a third more than they are today. Nothing has changed. Like the 10 years out outlook has not changed. So it's complete nonsense. It is an opportunity to add. It is an opportunity to buy. I haven't bought Enphase today yet, but I'm going to be buying some Enphase today, slowly, because I have a feeling on Wednesday, right, it's going to crash again because of the earnings. It's the feeling that I get. So pacing my buys. I believe in general, I believe that the size of the position, having the right position sizing, is more important in my view than having the right purchase price. I mean, ideally, you would want to have both. But typically, if you just shoot for you say, oh, I want to get Enphase at $70. When Enphase at 70, everybody's going to say, oh, Enphase is going to 20. And then some are going to say, oh, Enphase is going bankrupt, right? And then you end up never buying it, right? I'd rather have a cost basis a little higher and have the position be right, because let's remember that Enphase, well, now it's dropped more, but for the longest time was the top five, one of the best performer stocks in the S&P 500. It is closely trailing Tesla in terms of returns. So this is something that we have to keep in mind. But anyways, I invest for past 2030. I think like most people who view this channel, actually, it really doesn't matter on your age, as long as you're a net accumulator of stocks and assets, which, if you have a career, you should be a net accumulator of stocks and assets your whole life. Like even if you're in your 60s, it likely makes very little sense to spend everything. If you have a family, if you have kids, you keep investing in your 60s for your grandkids and your children, etc., right? And to pass on that money to the heirs. I believe you can be a net accumulator of stocks much of your life. And so, anyways, that's all I have to say about the stock price movement. I don't have anything more to say about the stock price movements. But really, what I want to talk about today is the macro nonsense and how macro is shortening our time horizons to just a few months, and we're missing the big picture because some old man today made a comment about interest rates not dropping until the late 2024, end of 2024. And I'm sure in 3 months we'll have an old man telling us, oh, now it's going to be mid 2025, and this will go on. The old man who makes the statement changes every other day. But the statement is always the same, and it's complete nonsense. So let me talk about solar, because we're investing in solar, right? So what we care about is solar. So what is solar energy? Solar energy is a revolution. It is like steel. When steel became a thing, we all of a sudden could make buildings that were 5 stories tall, and we could make bridges. It is like the light bulb. The light bulb did more for education, for literacy, than literally just about every single other innovation since the printing press. The light bulb, all of a sudden, you didn't have to go to bed when it was dark outside. Kerosene used to cost a lot of money. You couldn't have kerosene lamps. So the light bulb was a tremendous revolution, which we owe to Edison, right? Just like DC current. Turns out DC didn't win, but the light bulb won. This is an example of a light bulb. Let me show you this light bulb. This is the Centennial light bulb. It's in Livermore, California, and this light bulb has been shining, burning since 1901, and it is still there. And so in 1901, did people think about buying the cheapest quality light bulb they could just because they needed light that month? Or did they just invest in a technology that can last 100 years, right? And that's the nonsense that we're in today with this fiat system, this fiat standard, where the value of the money is determined by the whims of old men and how they feel. But the value of the money should be determined by the market and the market alone. It should not be determined by feelings of people at the Fed. So this is what's hurting these stocks, is the feelings of people at the Fed, oh, we should keep rates higher for longer. This has become complete nonsense. This is the kind of thing that will make you totally dumb. Listening for 2 years of people's rumblings about the economy and inflation and predicting the stock market has become a game of interpreting the weight of a word and the value of a word uttered by an old man. That's literally the game, and it's not even looking at inflation. It's trying to predict how the Fed is going to thinking about interpreting inflation and what they're going to think about removing this time. This makes absolutely no sense. Let me tell you what makes sense. Solar energy makes sense, because solar electricity, and if you've seen my last video 3 days ago about solar electricity, I believe the biggest revolution of solar electricity, not only is it nearly free, but it's decentralized. And because it's decentralized, it means that you don't need a social structure to manage it, right? It's not like a nuclear plant. I saw today on Twitter, people talking about how a nuclear plant really takes less space and makes more power than solar energy. Well, yes, but it is a centralized system that is administered by humans who are going to want profits, and thus the costs, the power is not going to be as easily and as freely accessible to the masses as solar is. And you're always going to have a transaction associated with with electricity costs when you produce it in a centralized way, while you don't have any transactions associated when you produce it in a decentralized way. Let me move on to solar. Big advantages to solar. Solar has no moving parts, right? This is a fundamentally new way of making power. Making power back always has always been about turning a turbine, right? You turn even nuclear energy. Nuclear energy is turning a turbine, right? It's no different than making power from a dam. You're just turning a generator, right? Solar doesn't work like that. Solar has no opportunity for breakage, right? As long as you buy hail-resistant solar panels, which most are, they have no opportunities for breakage. There's no moving parts. You just put it on the roof, clean it every other month, and that's it. That's it. Solar panels are, by the way, are slowly but surely getting cheaper than plywood. They are so cheap. They're becoming so cheap. They're very easy to manufacture these days. China has become a leader at making solar panels, but American companies make them too, and Canadian companies and European companies. Solar is long-term thinking at its finest, and I want to show you this. Of course, solar panels started emerging, late 70s is really when we started seeing them, because of the oil crises, of the two repeated oil crises. People were like, okay, we got to find a solution. So the first practical examples of people actually trying to generate energy with solar was the late 70s. This is an example of an article. If you look it up, this man right there set up this solar panel back in 1979, did efficiency testing on the solar panel today, and it's got 92% efficiency rating 40 years later. This is a 2020 article. So this is a 44 years old panel that is still generating power, right? So we know that the 25-year warranty is, something they put in there because they have to stop their liability after 25 years and stop that warranty claim from happening. But these things are going to last longer than 25 years, much longer. I don't know if they're going to last 40 years like for this man, or if they're going to last 100 years like for this light bulb. But solar is an investment. Photovoltaic solar is an investment that pays for itself in 6 to 9 years, after which your power is nearly free, minus the little bit of water when you have to do when you clean it, right? Your power is nearly free for an undeterminate amount of time. So minus very tiny OPEX, then you have power that is nearly free. Just like that light bulb. That light bulb is free light. It's producing free light. The cost of that light bulb since 1901 has been depreciated a long time ago, right? Anyways, that's for another topic, right? The issues of accounting and depreciation, and the idea that you're going to throw it out after the depreciation period. No, these assets can last a very, very, very long time. But unfortunately, we live in a world of Keynesian economics, where really man-made costs of money, man-decided costs of money are entirely disrupting our nature. The human nature is, and I fundamentally believe that as a Bitcoiner, I've been into Bitcoin since 2015. The human nature is naturally not Keynesian. The human nature is a long-term thinking nature. That's why we have families. That's why we have nesting. That's why we have communities. That's why we have partners. That's why we build shrines to our dead. That is why we have religious structures. Everything about us is a long-term thinking species, and the period that we've been in is really an anomaly. This is not the norm, and these are all topics for other videos, of course, but this is not the norm, right? Ever wonder why our modern buildings are so ugly, right? Ever wondered that? I live in Texas. Sometimes in Texas you can drive in brand new neighborhood and you can see those DR Horton homes, and they all look exactly the same, and they are very, very bland. They're practical, but they are bland, and they all look exactly the same. And then sometimes I go to an older Texas town like Galveston, and I drive and I see Victorian homes, and they're more beautiful each than the next, right? Today, because of Keynesian economics, we're just thinking about the return. You gotta make the house as cheap as possible. Doesn't matter if 10 years from now it starts falling apart and looking like crap, we'll build a new one. Right? That's Keynesian thinking. That's short-term thinking. I'll show you a picture of a cardboard bed in a second. Anyways, but that is not our nature. That is not the nature of us, of humans. The nature of humans, by the way, is the idea of you're gonna plant an oak tree, and when you plant an oak tree or when you plant a tree, you're not gonna be the one sitting in the shade. Right? It's your grandkids who are gonna be sitting in the shade because the oak tree takes 80 or 100 years to grow. But while people still plant trees for their homes, we see fewer and fewer communities, municipalities investing in things like making streets beautiful and making alleys beautiful and planting trees. In fact, we tear them apart and remove them, right? We don't see gardens anymore. Because because of this Keynesian thinking, because it's pointless. You're planting a tree today, it will be beautiful in 80 years. It's entirely pointless. Why would you do that? We have this crazy short-term thinking that is affecting our stocks. This is the short-term thinking. The reason why stocks like SolarEdge is down 37% today is because of this short-term thinking. I spend a lot of time on this channel arguing for what's the best technology. Is it central inverter? Is it a micro inverter? And we can argue, and this is all fun, and this is a smart debate. But really, the smarter debate we should have is how come we are on this system where it's all about the denominator, all about the cost of money. It makes absolutely no sense. Like the bigger picture is not our disagreements on whether I like SolarEdge better or Enphase better. These are tiny things, tiny topics, compared to the problem of the cost of money, and the problem of the cost of money being decided randomly by random people who, by the way, are not elected at all. I mean, this is just crazy to me. This is just crazy. So Keynesian economics is really the world of money influenced by old men. And so today, all stocks are down today. Why are all stocks down today? Because I guess he's not that old. He's 58. Because this 158-year-old man said, oh, I don't foresee rate cuts coming in 2024, right? Ramblings. Oh, I don't foresee. Oh, I foresee this. I foresee that. And just one comment can make all of the stock market go down 3%, right? Except there's a revolution brewing. There's a revolution growing technologically, right? The reason why I don't own bonds, my bond alternative is Bitcoin. My second biggest position is Bitcoin, and I think the irony is that Bitcoin is up right now because we are missing this denominator. We are missing this standard of money that is not influenced by the biases of someone in a committee. We're missing that currency, and we used to have that currency. And so many of the amazing innovations that we had, in the late 1800s, early 1900s, were done under a gold standard. And even the innovations of the Renaissance were largely done during a gold standard. Today we don't have a gold standard. I believe that is temporary. We're moving back to the standards of real money. Money supply should not move. Money supply should be fixed, right? This is a Keynesian, this is a classic economics way of thinking, to think that the money supply should move. This is not us. This is not human. This is not anthropology. Money supply should be the scarcest asset and should not move like this. And you have people making decisions about their lives based on nonsense money supply. And this is a topic for another video, but that comes to mind, which is, one of the great things when we had this 0% interest rate environment ever since 2007, 2008. And I think we're going to get right back to it. One of the great things is that once you have a 0% environment, yeah, it's horrible for inflation, and you have horrible inflation, and people need to build inflation in their models. But that's the drawback. The upside of having horrible inflation is that then you can plan, because even if our inflation is horrible and you're going to get horrible inflation, it is at least stable. And when it is stable, i.e. horrible all the time, i.e. devaluing 15% every year forever, that's a stable outlook on monetary policy on which technologies can build on which stocks can be assessed. You cannot assess stocks when the cost of capital goes up 20-fold, right? People can't assess whether their purchases make sense or not when the cost of capital can move up or down so quickly. It is not natural. Think about the old gold standard, right? In the old way, would it be possible? Let's take the example of what happened in 2020, 2021, money supply up 40%. Would it be possible for gold miners to get 40% more gold out of the ground in a matter of 6 months? Would that be possible? No, it's not. You can only find 1 to 2% more gold per year, right? And the same is true with Bitcoin. You can only mine about 2% extra Bitcoin each year, and it's getting halved. And you're going to be able to mine even less Bitcoin. So it's a predictable new supply. What's more important, I would argue, than the cost of capital is, can you actually predict that cost of capital, and can it be stable? And the fact that this will get back to 0%, for sure, in my view, no investment advice, but this will get back to 0%, means that companies will be able to predict, and they will be able to rely on a constant again, right? Why is the cost of money influenced by just a few people, right? Because we are not under a gold standard anymore. Most people take 1971, but 1971 was actually the external convertibility of gold, right? 1971 was for outside of the U.S. What was the true end of the gold standard was Roosevelt, in my view, arguably the worst president in U.S. history, Roosevelt, who took, and I'm sorry for saying that, I know Roosevelt is liked in some circles, but I definitely don't like Roosevelt, anyways. What he did, he said, okay, well, there's an executive order, now all persons, you can't have gold anymore. You have to deliver your gold and give your gold to the Federal Reserve Bank. And then what happened? What happened after the fact, right? Of course, this is what happened. They changed the value of the gold from 20 to 35. So that's a 69% increase in the balance sheet of it. They depegged the currency from gold. So they said, so they devalued the dollar by 69%. It's a better way to look at it. They devalued the dollar. They're like, okay, now your dollar is worth 69% less. The beauty of a gold standard is that you did not have this subjectivity as to pegging or depegging the value of the dollar, increasing money supply. This is the same as increasing money supply, by the way. You didn't have this issue of increasing money supply, because the only way that you could increase money supply under the gold standard was through man's ingenuity and hard work. You needed to work hard. You needed to find more gold and get it out of the ground. That's what you needed to do. And the few videos I've made about Bitcoin, you'll know that Bitcoin is even better than that, because Bitcoin has a fixed supply. So you know exactly how much new Bitcoin you're going to be finding into the proverbial computer ground, right? The mining, the proverbial mining ground or mining sector of Bitcoin. You know exactly how many new Bitcoins will be found at what schedule until 2140. Right, that's the beauty of Bitcoin. Gold, you still have some uncertainty in money supply of gold, but gold has this advantage that it's very hard to find everywhere, and so it limits how much new gold can be issued. Right, and I do realize that one of the other issues, there were issues with gold, right, the fractional reserves and fake gold, or the issuance of fake gold against fractional reserve banking really came also during the Renaissance and the Medici and all of that. So we had some monetary printing going on with gold, and this is something that also Bitcoin really solves, because you can audit the ledger at all times, right? But anyways. So this is the reason, because we are not on a gold standard, this is the reason why now the value of the money is influenced by a handful of people and not influenced by our natural, logical views of the future and views of money and saving for the future. This is so prevalent in everything we do. Today, our investments are heavily influenced by money supply and the cost of money, and the changing cost of money, because we're adaptable species. But if the money keeps changing all the time and the cost of money keeps changing all the time, we're going to be in trouble. Mr. Market ignores the future when the cost of money is very high. It just looks at the very, very, very short term. And we start seeing anomalies, and there's a lot of anomalies out there. But we start seeing anomalies like this, like buying cardboard beds and cardboard furniture. Would you buy a cardboard bed or cardboard furniture? Right? If you're a short-term thinker, you might. I mean, it makes sense, right? It makes sense. It's cheaper. So just go buy a cardboard bed, right? Might not last you more than a month, but it's cheaper, right? And the same is true for everything we do, right? Solar stocks do not make sense if you have a short-term horizon. Why would you put $25,000 worth of solar panels on your roof for free electricity when you can just pay $3,000 a year for electricity now, right away, this year? Why would you invest $25,000 for free electricity for generations when you can just pay $300 this month and get electricity this month? Right? It's electricity in both cases, but one of them is future forward electricity. It is the beautiful architecture of electricity. It is the oak tree, the magnificent oak tree of electricity. And the other one is the cardboard bed of electricity. Right? It's not the same. It's absolutely not the same. The same is true for a stock like Tesla, right? Who manufactures a car, by the way, which lasts 4 times as long, because first principles, little moving parts, right? Next to no moving parts compared to an engine, and costs 10 times less to operate, because it's a much more efficient machine. It runs on electricity. But why would you buy a Tesla car? Why would you buy an electric car where you can just, I mean, it makes no sense. It really makes no sense why you would even buy a gas car at this point. In my view, absolutely no sense. But people still do. People still do. So, anyways, today these stocks are down, right? 30%. That makes very little sense. Like I said in my prior video, go on a walk, turn off the trading app, go have a nice weekend. That's what I'm gonna do. I'm gonna be buying some Enphase. I'm buying Tesla too. Tesla's dropping again, so I'm buying Tesla too today. I'll have to see what stocks I sell, but first, I think my poor Palantir, my final Palantir shares will be gone today. I have a feeling. But then I'm gonna go on a walk and listen to actually things that make sense. Listen to philosophy. Listen to Bitcoin podcasts. These are very, very smart folks that you can listen to out there. Listen to technology podcasts. Right? There's amazing things you can learn in technology. Listen to history. Like things that are not stressful. Well, it's not even a matter of stress. It's a matter of making sense. Things that actually make sense, right? Because it's been a year and a half. It's been a year and a half where we just have, complete nonsense about the value of the money and how these old men are going to interpret what's going to happen to the money supply, etc., etc. So, anyways, to me, Enphase and SolarEdge, they both have a very bright future 10 years out. I have little doubt in my mind, very little doubt. And I put my money where my mouth is. This is not investment advice. Just know it will hurt if I'm wrong, but that's the point of these channels, right? It's there's skin in the game. There's skin in the game in what I'm reporting on here, because that's what I do. And if I'm wrong, then I guess people will laugh at me, but I will still be right. It's still the technology. It's still the technology of the future. Both companies' returns. Let's be fair. The companies' returns are still well above the Nasdaq. To me, this is temporary. These will mean revert. Stocks have a tendency to mean revert. Right? They're still in the S&P 500. They're still a duopoly. They're still both market leaders in their field. And as long as the sun shines, the value proposition of these two stocks will remain outstanding. Hence the title of the video. Did the sun stop shining today? No, it did not. And lastly, the cost of money will not remain this high for long. And I've said this the channel has been around a year, so I've said this for a year on the channel, but outside of the channel, I've been saying this for way longer than a year. It will not remain high this long, and I didn't anticipate the policy to be so, to quote Elon Musk, to be so boneheaded. I didn't anticipate the policy to be like this, because you're just digging a bigger hole for yourself, and you're just digging a bigger rate cut in the future by holding like this. But we still have this tension. You have this tension between, by the way, the IRA bill, right? The Inflation Reduction Act was supposed to be the last bill, the last big bill, right? No. I reported on this. It was rumored to be $100 billion yesterday, or was it 2 days ago? Yesterday or 2 days ago. But anyways, in 24 hours, it took 5 billion. So now it's not 100 billion. Now it's 105 billion. Frankly, you should have made it 150 billion at this point. Nobody would have seen the difference. I just add 5, just add 10, just add 20, which is why monetary printing is coming back. Monetary printing, in my view, will be the only constant, because these bills are not going to they're not going to stop. There's always going to be a good reason to put 100 billion there, 100 billion there, 100 billion there. Right? And the only thing that is standing in the way of this and this printing is the Fed chair, right? But the Fed chair is bluffing. This is a bluff, because you can't. You could keep interest rates this high, but if you keep interest rates this high, you have to be okay with the government going bankrupt, with most companies going bankrupt, with most families losing their homes, with most jobs being lost, with most states going away, with most cities, hospitals, universities, institutions running out of business, going out of business. You have to be okay with all of this if you're going to keep interest rates this high. And nobody's okay with that. So there is no return. There is no return to paying off the debt. We just need to get, in my view, into a monetary inflation that we all understand. And we understand now that monetary inflation is just one more tax. We have this tax, but if the money is not spent, it devalues. And to me, this is what's going to happen. This is not investment advice. This is just my view. My view is we just have to accept a constant rate of devaluation of the money and stop bluffing each other and thinking we can stop the money from devaluing. We cannot stop the money from devaluing. The only way to keep spending and to keep the system going is to agree that the US dollar will devalue at a constant rate. And then we should make sure that we don't devalue it more than it should, but that it devalues at a constant rate, because we can't do it otherwise. It's very clear to me The side of monetary printing will win. It always does. It is the way we will choose, and we've always chosen that way, and I think we'll continue to choose this way because we are not willing to go through the pain. Are we willing to have no social security at all ever again? Are we willing to kill social security? Are we willing to stop the government? To have no government whatsoever again? No roads, no infrastructure, no highways, no police, no military. Because that's what we would need in order for rates to stay this high. And that's not going to happen. I don't think that's going to happen. So anyways, this was it. I realize I went a little on tangent off of solar, but anyways, I hope you found the video interesting. This is not investment advice. Obviously, this is just entertainment. I hope you were entertained. I appreciate your likes, appreciate your subscribes. Thank you for watching, and have a wonderful day.